Then we go on to the fourth question, which is E4-15. So balance sheet worksheet with differential. Land Corporation acquired 100% of Fate Corporation's common stock on December 31st, 2002 for $189,000. Data from the balance sheets of two companies included the following amounts as of the date of acquisition. So we are given the balance sheet of both companies. At the date of the business combination, Fate's net assets and liabilities approximated fair value except for inventory, which had a fair value of $84,000, and then buildings and equipment net, which had a fair value of $165,000. So we are asked to give the elimination entries to prepare the consolidated balance sheet worksheet, okay, and then we are asked to do the consolidation balance sheet worksheet, okay. Again, like the usual steps in doing the purchase more than the book value, we need to calculate first the differential, okay. So the purchase price is $189,000, okay. The book value is only $150,000, okay. You can use total asset minus the liabilities, or you just directly use the common stock and retained earnings. So the differential of the acquisition, again, purchase price minus book value, is $189,000 minus $150,000. Therefore, you will get the differential of $39,000. And then the second step will be always to calculate the excess of net identifiable asset. Okay, we know that the one that is more than the book value is only inventory and buildings and equipment net. Okay, so inventory is $84,000, the book value is only $60,000, so the excess is $24,000. And then for buildings and equipment, the fair value is $165,000, the book value is only $150,000, so the excess is $15,000. So you will get $39,000 for the excess of net identifiable assets. So we see here that the differential is equals to the excess, so there's no goodwill, okay. And then we can go on to the basic elimination entry. If you want to do the book value calculation first, it's okay. If you want to do it, it is okay also. And then the same thing about the differential calculation also. If you want to do the schedule, it is good. If you don't want to do it, it is okay, okay. And then the basic elimination entry will be always the same because this is the acquisition date, okay. So there is no income or dividends, okay. Just directly debit common stock, debit retained earnings, credit investment in Fate stock, okay. $60,000, $90,000, the credit is $150,000. And then we have the differential reclassification entry, okay. So debit inventory $24,000, which is the excess, and then debit buildings and equipment $15,000, the excess also, okay. Then credit investment in stock $39,000. Okay, so there is no amortization also because this is acquisition date. And then B, we can do the worksheet already. Okay, so you just move all of the data from the question. Okay, the assets is from cash until investment, and then liabilities and stockholders' equity from accounts payable until retained earnings. Make sure it is balanced, and then you can go back to elimination entry to put off the numbers, okay. And then remember, investment, it is better for you to separate into two rows, okay, because the numbers are for different elimination entries. And then after that, you make sure that your debit credit column is balanced. After that, you can go to consolidated column. You just sum it, okay. For asset, remember, if there's a debit amount, you plus it, yeah. And then investment must be 0 as always, okay. Similar with accounts payable and notes payable. Then common stock will always minus the debit columns. Retained earnings will be the same. Then you sum it. If you get the balance amount of total assets and total liabilities and stockholders' equity, then it is done already.